All right, the market, thank you, Michael. The market is open, and we've opened on the downside, but it's not a huge sell-off by any means. Tension over Pelosi's visit to Taiwan is a factor in the market, but again, it's not pushing it down too much. Dow's off about 150 points, and I see about half the Dow 30 in the red, half in the green. That's the Dow opening down a half percentage point. How about the S&P 500? Also opening on the downside. Not that bad. It's down 0.35%. And the NASDAQ composite, where's that this morning? It is down, again, just a tiny fraction. We'll get there. You'll see the NASDAQ any day now. All right, let me move on to, there you go.
There it is.
It's down 0.6%. Show me big tech, please. Always like to show them to you right at the opening of the market, see how they're doing, because they really command the market. The one winner, it was a winner, was Amazon. Now they're all in the red, but not by much. All right, Pinterest. Absolutely surging this morning. Look at that, 70% up. Yeah. An investor, activist investor, that's the important word, activist investor, took a major stake in the company. Who did it and why does it matter?
Elliott Investment Management, now the largest shareholder in Pinterest, and it backed the CEO, a man named Bill Ready. He just took over at the end of June. So you have Wall Street thinking Bill Ready is ready to take Pinterest to the next phase of growth. And then you have a management and a strong activist endorsement of that management. I think that's what Wall Street needed to hear today. And that's helping them overlook lower profits that did come out of Pinterest.
It was much higher than this, wasn't it? It's now it's at 23 bucks. It was way up there.
It was about 89.
89, yeah.
Last February.
Okay.
So it was a pandemic darling. Everyone stayed at home and they made their pretty little boards of how they were going to redecorate their house and their inspiration. And then, you know, we went back out again.
Some big companies reported before the bell this morning. Well, I know Mike just covered Uber, but go through it again, please.
And I want to add to it, because you said when the drivers come back, they are coming back. New driver signups here in the U.S. up 76% year over year. So they're starting to do that. It helps explain the 13% gain today. They did still report a loss, but revenue is much stronger. And they're able to expand right now. Cash flow positive, $380 million for, I believe, the first time.
Hang out on a street corner in Manhattan, New York City. You don't see many yellow cabs any longer. You see a fleet of these Ubers coming up and picking up people waving their cell phones on the corner of the street.
And Stuart, like Facebook, when Uber figures out the advertising piece, which is a much bigger margin business, you're going to see their numbers take off.
Where do they advertise?
They advertise on top of the cars.
Oh, those billboards on the top.
They'll be advertising inside of the cars. They advertise on the app.
All over.
I haven't seen anything in a car. Right?
Not yet.
Okay.
Not yet. Yeah, just, oh my God. Caterpillar. It's a Dow stock, and it is down nearly 5%. What's the story?
Make heavy equipment. So because of the supply chain and suspending operations in Russia, they're getting hit. There is demand, but their sales are being capped by shortages of raw materials, and it's so expensive to ship everything, right? So that pushed their operating profit margins down, and the stock is responding.
Tell me about JetBlue.
Okay. They're still losing money. That's why it's down. But they do expect to post a current quarter profit. Their costs are rising. Demand's rising, costs are rising. I just picked out one example of this. Their fuel costs. It was $4.24 a gallon in this past quarter. Compare that to $1.91 in the same quarter last year. You can't budget for a jump like that. And that's what corporate America, every industry I can think of, has been grappling with. So as we criticize some of these earnings, I think all in, everything that's been thrown at strong companies, they've been able to handle.
Yep, you got it. Tell me about Apple. Did I see that they are starting to sell bonds?
Yeah.
Why are they doing that?
Well, I guess they find it attractive right now to tap the corporate market. My question is, why aren't they borrowing more in this way? $5.5 billion is pocket change. It's pocket change. Go ahead.
So they're borrowing money at a much lower rate to invest and buy back their own stock, saying that it'd be like you taking a home equity loan and paying 2%, saying I can invest at 10%. They're just taking the arbitrage there because they're betting on themselves that they're going to return a lot more money than the interest they're paying.
What does Senator Warren say about that? Borrowing money outside to
why don't they just borrow
stock?
money and buy Netflix or buy Peloton?
They may.
Apple buying Peloton? I can't see that. Can you? Mike, can you see that?
At some point, Peloton still has a high valuation, but at some point, Apple wants to expand into health and wellness in a much bigger way. So that would be a way to do it.
All right, let's talk liquor. Let's talk alcohol. Why not? Constellation Brands. What's it doing right now? It's up.
Nothing.
I think not much. It's not doing much. Analysts, I'm reading off the prompter here. Analysts think a strong demand for beer could help the stock.
Okay, so the news is that BMO initiated coverage with an outperform. But we have spoken about how quick the consumer changes their taste for everything. Add alcohol to that. Not happening yet for beer. We still like Corona, we still like Modelo, and BMO says that will continue for Constellation Brands.
I am told amongst the drinking fraternity that people are drinking less wine, or sorority, I don't care, drinking less wine and more hard spirits. Have you noticed this, Murph?
I'm just coming off my daughter's graduation party, so I was laughing because maybe I had something to do with this pop here. Yes, there's a big push to tequila. A lot of the younger generation still tequila.
No, you got it wrong. They're all going to Tito's vodka.
No,
that's old.
That's old.
No, Tito's is over. Tequila. Trust me.
Tequila.
The fickle new generation.
Yes.
Hard ciders were really big. Now they're not. Now it's the hard
Hard seltzer is taking a downturn.
iced tea and lemonade put together.
Whatever that is.
I know, I can't think of the name, but I see
So
it
we're
all
done
the
with
time.
liquor, are we?
Tequila.
Tequila.
Versions of twisted tea. They're telling me twisted tea in my ear.
Twisted
Let us
tea.
know your favorite drink.
Okay, let's move. Let's do something serious here. Look at the big board. I mean, now we're down 230 points, for heaven's sake, and I got to believe that part of this is the tension because of Pelosi's visit to Taiwan. She lands within the next hour and a half, by the way. All right, check that big board. We're down. Take a look at the Dow winners, headed by Merck, Amgen, J&J, Cisco, Procter & Gamble, all on the list. S&P 500 winners, topped by Xylem. Don't know what they do. Gartner, Zimmer Biomet. Oh, good Lord. Okay, let's move on. The NASDAQ Composite. Who's the winner there? Intuitive Surgical. I don't know. Well, Charter Communications.
Zoom.
Zoom is on there. Back up again. Okay. But no big tech on that list. Come on, Murph.
No big tech. It had a huge rally in July, and now it's kind of staying here. Not a big sell-off, so we have to digest this rally before we move higher.
Whatever you say.
Yes, sir.
Thank you. 10-year Treasury. This is the interesting story. Look at that. Now the yield's gone up to 258. 10 minutes ago, it was at 253. That's a huge move in the bond market. Good Lord.
I feel like 20 minutes ago we were talking about 3.5 on our way to 4, and,
Yes.
and now here we are at 2.5. So that's very positive for big tech.
I guess it is. Check the price of gold, $17.98 per ounce. Check Bitcoin at 22,000 and change. Oil, what is it now? $94 a barrel. Nat gas, where's that today? $7.84. And gasoline keeps on coming down, 2 or 3 cents a day. Your national average for regular is now $4.18, but in California, you'll still pay $5.58.